Good morning, everyone. Welcome to our Thursday morning trading session. The markets just opened up, and what a day yesterday. Oh my gosh, what a tremendous trading day yesterday was. I don't know how many of you hung around for the afternoon session, but man, the market was strong. It was nice to see such a strong rally again. Okay, so we're looking at the NASDAQ here. Just a real quick overview for those of you who are new. We've got the Hawk Scalper here in the top left, Falcon Swing Trader, top right, Eagle Trend Trader, bottom left, and the Raptor on the bottom right. All right, let's take a look at where we've been, where we're going. We'll take a look here on the Raptor so I can set up my Trailblazer. All right. So most of the activity looks like it came actually during the North American session, which was very, very strong yesterday. Well, up until the close, but we saw a really nice rally. The market making some rather significant gains, and then after that they kind of went sideways for a little while. The Asian session, a little choppy, enough room in here for a few scalps, and then the European session took over, and we had a little bit of a run up and a little bit of a run down, and now we're working on a little bit of a run up. Possible cloud crossover signal here on the Raptor. Hopefully they're not going to run too far before they give us a chance to get in there. And that's kind of what we're looking at right now. Ooh, we did get a first micro macro cross and a trend change signal here on the Hawk and the Falcon, respectively. Let's take a look at the Falcon signal, because that's giving us a very nice bounce off of the median line and powering right on through here to the primary resistance. The trend change signal occurs when your trend line changes color, and it's essentially your first signal where everything is in sync. But we have this characteristic little up, down, up pattern. You see, we have the buyers forcing the trend line color change. We have the sellers come back. In this case, it could only muster a bar. And then we come back with more buying. Buyers produce a signal, and depending how we would set that up, we just tagged our high probability target. All right, well, we'll give them a moment here to settle in. I'd really like to get that cloud crossover here in the Raptor. What the cloud crossover is, when your clouds cross over, see how the clouds crossed over here? Or we're just beginning to cross over? Sometimes this will occur within the band as the clouds are crossing. Sometimes it will occur just after the band has crossed, but it's something to keep a lookout for. What we're looking for is we're looking for the market to retreat into the cloud, and then for the cloud to bounce the market out. I may have to take a flyer on this one and just take the market long on a move above the high where we're going to produce our signal. Now, it's still very early. My stops have to go way down here. This is a very risky proposition. What we're doing is we're just kind of testing the waters, seeing which way the wind is blowing. You may want to, if you're going to follow this trade, you may only want to do it on a single. Because we are waiting for that cloud crossover to occur. Not getting any subsequent signals on the hawk. Well, we are, but they're not our high probability signals. This was our high probability signal right down here, our first micro-macro cross. All right, I just heard the order fill. So Tom is asking, what is your cloud? Mine is 12 and I already have the crossover. Are you running the double cloud, Tom? Oh, here, just a moment before we get this. I've asked Ben to make this the default on the Raptor, but I don't know if he's gotten around to it yet. At any rate, I've got two clouds here. This is from the Raptor Facebook forum. If you're not already a member there, Raptor owners, there is a Raptor forum. DTS owners, there is a DTS forum on Facebook where you can share your ideas, where you can, discuss things that are working for you and see how other owners are using their systems, especially the Raptor, since the Raptor is a little bit more tweakable than the DTS system. But at any rate, Ricardo came up with the double band. And what it is I'm actually running two bands. I'm running a band, one at 8 ticks and the other at 12. All right, Tom says, can you go over that setup? Most certainly. Not on this chart though, because it's going to mess up my trade. 1 second. Let's bring over a YM chart. Here's the YM on the Raptor. It's really quite simple to do. Right-click on your chart. And then when you go down to your indicators here, you're going to find IW RTS Raptor Cloud. Double click on that and you're going to get two Raptor clouds in your indicator assortment. Right? On one of your Raptor clouds, change the size to 8. On the other Raptor cloud, you can leave the default size as 12, but you're going to need to change your colors. So down here where it says band coloring, pick a color, any color, just not the default color. The band edge, you will also need to change the color. Again, pick a color, any color. And then when you have that set up, you can apply your changes and voila, you will have a double band. So the double band, now we look for things like the cloud crossovers. We have two areas where we expect hard edge bounces. See, sometimes the reason Ricardo was doing it with the double band is he noticed that sometimes he would get a bounce early. So Ricardo has a lot of shorter term objectives. So on these types of bounces, he's just scalping. On the first bounce, he's scalping, but you can see there's still some significant follow through. All right, so then you'll have your nifty double band on your Raptor. And while we're waiting for that, I'm going to email Adam and Ben right now while I think of it. sent it off to the powers that be, and hopefully they'll make that the default now on the Raptor. Okay, the buyers pushing on through. We should hit the break-even trigger here in a moment. I'm almost tempted to roll that break-even a little bit higher. There we go. Why? Because of this. Because of this, we still haven't had our official cloud crossover. There's still a reason to assume the market's going to try to get into that hard edge one more time. And here they come. Oh, well, it looked like they were trying. You did get a 3-arrow consolidation here on the Hawk. 1, 2, 3. The market bolting a little bit early. It's gotten outside of this consolidation pattern, so I would not consider this fourth signal a 4-arrow consolidation. Because of sometimes when the market's moving quickly, I will take the signal off the 3rd arrow on these 4-arrow consolidation patterns. I will set up to take the signal on the third time and just try to keep my stop out of harm's way. Just in case the market moves very, very quickly, I'll just assume that I'm going to try to ride out the swing. At this point, I would have probably anticipated a macro pullback and that 4th signal to print somewhere down here. But it didn't work out that way. Now we're printing that 4th signal, but it is no longer part of the 4-arrow consolidation. The market laboring a little bit. I do not like that. If they're going to run out of steam heading higher, well, you know what that means. They're going to make a fairly brisk move lower. $44.50, we haven't seen that number for a few days. Come on, get up there. I'm trying so hard to be patient. Come on, keep pressing. You can do it. Oh, man. Oh, man. All right, so now the big decision is, do I want to try to ride out this swing? Because they are not cooperating. Getting a whole lot of pressure here around this 44.55-ish area. Got a double tap on there now. You see how they rejected that price twice. We need to get somebody on the other side of 44.55. Come on. Here we go. If we see 44.55 trip, I think we're going to see them at least press through to the break-even trigger. And it would probably be a good time to start to roll up our stops anyhow. If they continue to fail at 44.55, my goodness, and the buyers just don't have it. All right, there it is, 44.54 half. Come on. There's 54 half, 54 3/4. There it is, 55. All right, we should be okay now. We've hit the break-even trigger, hit our first profit target. Hooray for us. All right, this is looking like it's a fairly decent run up. On the part of the buyers. Come on, don't flinch now. All right, I'm going to throw that on the back burner because the rest of you are probably wondering, well, Eric, is there another signal going on here? Good question. Let's take a look. Oh, it does look like the Raptor, or pardon me, the Hawk. Ooh, that's a very sloppy 4-arrow consolidation. I don't like I don't like to see them quite like this, although in hindsight, I would call this a 4-arrow consolidation. The consolidation patterns I normally like to see have a little bit of a flag shape to it, either a bull flag shape or a bear flag shape, in which case it's going to move the other way like that. Those tend to be the strongest. So when you have your 4-arrow consolidation pattern in the downtrend, we get 1, 2, 3. We look for the market to move on arrow number 4, and in an uptrend, it's going to be like that. Occasionally they will move sideways, as this one did, and that's okay. The ones I like the least have a little bit of a slope to them, like this. Now they may still work out, but it's not the kind of trade that gives you that warm fuzzy feeling. You know, this one I can get on board right away. This one, sure, no problem. Even yellow bars. This one, you know, I would probably scale down my risk amount. Not saying I won't take it, but I would probably dial back my risk a little bit, or just throw a onesie on it just in case this kind of thing happens, where you get the big follow through. But in hindsight, this one did end up going a little bit more sideways, which is okay. A sideways one is fine. Like I say, the ones that end up sloping upwards or downwards in a downtrend. Not quite as favorable a setup. So you got yourselves a 4-arrow consolidation there. The eagle, surprisingly, let's see, did I miss a signal here on the eagle? No, not really. I know we got a big trend going on here, but we didn't get a eagle signal. Now, technically, this is a red bar buy signal. However, it would have been nearly impossible to take as it was developing. Why? Well, because the eagle has no trend going on here. Just look at the context of this chart. Everything kind of moving sideways. I suppose technically you could say it's in an uptrend, but oh my goodness, what a choppy uptrend. Red bar buy, you go up for 20 points. Red bar buy up for another 10 or 15. Red bar buy up for another 10. Red bar buy up for 40. It's so choppy. There was no reason to assume that this red bar buy would follow through like this. Not on the eagle. But that's why we have more than one trading tool, right? All right, the Raptor's still pressing here, and my stops, I might as well get my stops in a little cozier. If I were going to try to ride out this swing, you know, if I didn't want to capture more open profit here, and I was going to try to nurse this last contract higher, my stops really need to stay way down here. You could try it to the hard edge, but that might not be far enough. So it really doesn't make sense to leave all this. Well, actually, your risk is from the bottom of that bar all the way down here. It's not from your entry. You've got to include your open profit. So you've got an additional $150 in open profit. That's probably not reasonable. So a break-even stop, take your chances. Traders are always adjusting their stops relative to their risk exposure. And by that I mean, all right, let's go here to the Falcon. So our next line is at 44.65. Let's say, close enough. So we're expecting 44.65 to be potential resistance right there. Oops, there it is. If our stop is way down here, we are risking a very inordinate amount of money to gain our profit, right? Oops, sorry, did that wrong. It's from here to, stop it. There. Okay, now we're used to risking inordinate amounts, right? That's kind of, well, what we do. We base our percentages on our probabilities on our risk exposure. However, when you're already in a profitable position, it doesn't make sense to incur a loss in order to grab that little extra bit of profit. So what traders will do is they will adjust their stops relative to this risk amount. So they'll say, well, I've got that much that I anticipate the market might give me before I hit my next resistance line. Therefore, I'm going to reduce my risk exposure to half or maybe equal to. So you see, if we're going to go to a one-to-one type scenario, our stops would be break even. If we're looking at perhaps a potentially twice the profit relative to our risk, we might run a stop like this. Maybe we'll use our ATR stop. So that's how traders do it. They're constantly adjusting their risk relative to what they perceive their reward to be. Now, you know that when we first start a trade, our trades can be very lopsided. When you first saw me take this Raptor trade, so we entered off this signal here, my stops were way down here because that's where the stops had to be. Now, if that is too much money for you, what you need to do is you need to reduce your position. You need to, instead of maybe going in with 2 or 3 or whatever your normal position size would be, scale it down. Take one contract, but don't strangle your trade because you can't afford to risk more. If you can't afford the risk, don't take the trade. There will be others. But, you know, if you're going to take the trade, set up the trade properly so that at least you have a chance of realizing a profit. What did I read just the other day? I thought the author put it very clever. He said something to the effect of, if you're scared to lose money, you will lose money, something to that effect. The point of the article was that the most successful traders, and coincidentally the most successful poker players, don't focus on the money. They treat it actually as a game, and the money is secondary. That's why I gray out the dollar value here. I'll check my dollar values at the end of the day, but I don't want the current open profit affecting my decision about the market. Now, I'll know automatically if I entered wherever I entered down here and I'm up here, there's a considerable amount of open profit. I may look at it and I may say, yeah, okay, maybe I should grab some of that open profit. That's different. But entering a market from a scared position, I know the market can't smell fear, but it's almost like the market can smell fear. Now, I handled that whole conversation a little ham-fisted, but I hope you get the notion. You should always risk an amount you're comfortable with. Very important. Risk an amount that you can trade and you can take that trade properly. If the NASDAQ is too expensive to you, look at the SPDR. That's the SPY. You can dial down your risk so you're trading for nickels and dimes. Literally nickels and dimes. Now, of course, you wouldn't want to because you're going to get killed on your commissions. You're not going to make any money. But at the same time, it's a good practice ground, right? If you're afraid to lose large sums of money, which you should be, you need a healthy respect for the market. Don't get me wrong. I don't want you going in, you know, with a Rambo kind of attitude, kicking butt and taking names, because the market will turn around and eat your lunch. You can't be flippant. You do need to be respectful of the market and its potential to harm your account. But at the same time, if you get a signal, you have to take that signal. And you can't be afraid to take the signal. You have to be, okay, macro pullback signal, high probability signal. I have to be able to take this signal and perhaps even risk it all the way down here, you know, below the crest in the macro line or even below the lows. Okay, trade manager says, nope, sorry, Eric, not going to happen. You can't afford it. Okay, if that's my trade, then I have to pass. If I decide I want to risk it down to here, I have to be prepared to walk away from $410. If I'm not, change your risk amount to something that you are comfortable with. You can trade the NASDAQ quite comfortably with about $200 at risk per trade. Yes, $200 is a lot of money, but in the trading world, $200 is not a lot of money. Barely in a drop in the bucket kind of money. Yeah, Daniel's asking, what's that other market you mentioned? That's the spider. Hold on a second. Let me see if I still get this spider on my data. No, I bet you I don't. One second here. I'm going to try to load it up. I got a new data provider, and I think that's no longer in my data feed. 1 second. Well, here, I'll show you. It's, if you look in your data feed and you type in SPY, oops, wrong side. Let's try this side. SPY. No, not that side either. Shoot. Doggone it, I can't believe it's not in there. All right, let's try this. Okay. It's an S&P derivative. And maybe Ninja just has a different symbol for it. It's the world's largest ETF market. No, I don't see it. The symbol for it is SPY, like that, SPY. It's actually referred to as the spider. The proper symbol is SPDR. I used to have it. I don't know why it's not coming up. Oh well, whatever. I'll deal with that later. I may have to talk to the broker. Get me my spider back. If we go here to I'll show you what it looks like. So let's visit barchart.com, and you can just type in the symbol SPY. There it is, Spider S&P 500 ETF. And you're going to see, look at the volume. Like, the volume's astronomical, 126 million. Is that today's? Yeah, that's today's. The thing with the spider is it's, like I said, it's a derivative of the S&P. You're going to see that the values are nearly the same as the S&P, except we've got a decimal place here. So currently it's trading at 210.47 cents. I bet you the E-mini is trading at 21,047. It will follow the E-mini pretty much lockstep. But the nice thing about the Spider, because it's an ETF, you can trade a single share if you want. Now, most brokerages will require that you trade, at least 10 shares. Some may ask you to trade 100, but even at that, you could buy in here, you could cover below the low, and it may cost you, I don't know, $20, $10, whatever you wanted to set it up as. Just remember, if you set up a trade like this for $10, you're going to need an equally big move to make $10. Right? So you need to be realistic. So a more realistic value may be to risk $200 way down here. That's an enormous move down here, $200. But if the market drifts up here, you make yourself $200. But it's a great way to introduce yourself to live trading, and it's a great way to control your risk without worrying so much about the money that you have on the table. If that makes sense. Kind of the same thing that we're doing with our trade manager, and you can still use the trade manager on the Spider. But yeah, a really good market. A friend reminded me of it, I don't know, I guess about 6 months ago. Said, yeah, Eric, if the E-mini S&P is too expensive for you and you don't want to trade the Dow or the NASDAQ, take a look at the Spider. All right, looks like we're going to get another little bit of a move lower here. We are getting a possible trend change signal and a late filter entry signal here on the Falcon. It hasn't tripped just yet. We do have the warning dots. Late filter entry, filter goes out of sync, comes back into sync, trend line never ever changes color. Beware of the uptrend. The bulls have not left the building. This is still very recent. But if you wanted to try a stab at moving the market lower, this would be an opportunity. So again, because it's a counter trend, potentially a counter trend trade, go ahead, dial your risk down. Maybe even do a second push on the entry. A second push means we let the signal engage, then we watch the market flinch, and then we place our entry. In fact, let me demonstrate the second push entry to you here. We should get a move lower, I suspect, well, at least to the primary. I don't think we're going to get all the way back here to the median line, but hey, you never know. So I'm going to try to demonstrate the second push entry for you. All right, so we should, if this bar closes on the low, we should get a signal. This is what I would consider a lower probability trade because of the uptrend. But the sellers are trying to show up. Okay, so there's the signal. Now, rather than take it right on the hash mark, I'm going to let the signal engage, and then I'm going to look for that second push. Oh, unless it starts to retreat before it even engages the signal. What we're looking for is we're looking for the market to move away from the signal. Now, very often what it will do, it will go into the signal for a tick or two or three, and then it will retreat higher. This one's already retreating higher, so what I'm going to do is I'm going to take it on the hash mark, you see how the prices have faded away and they're actually turning green now. What that means is we're going to need some renewed momentum to the downside before we take this signal. Okay, come on down. Ryman, I like your idea here, Ryman. Ryman says, Eric, I started studying the past 50 days chart on Raptor. It also helped me on trying certain trades. You know, a picture is worth 1,000 words. Yes, it certainly is, isn't it? Part of the challenge for us is getting comfortable with our signals, looking at a trade like this and saying, yeah, okay, that's a high probability signal. I can risk it. Good morning, Jim. Jim says the advanced decline a little in favor of the buyers. We got 1980 on the buy and 750 on the sell. I would agree with that. I think this rally here is still going to be something to deal with. Natalia. Good morning. Natalia asks, I saw that you sometimes set your multiplier to 3 and not 2.618. Could you explain that in a little bit more detail? Sure. So what Natalia is referring to is the default here on the ATR. The programmer's got a thing for Fibonacci numbers. 2.618 is a Fibonacci number. And I guess he figured that made a pretty cool default value for the multiplier on the ATR. You've got a couple of ways you can change the ATR. You can change the period. Now the ATR stands for average true range. So right now it's set to look 14 bars back, and this will be the average of your average true range. Now, the true range itself kind of runs through the heart of the pricing. The multiplier is almost like a statistical deviation. In other words, it moves it away from the true range. Like I say, the true range kind of runs right through the heart of the pricing here. So when the multiplier is set at 2.618, this is 2.618 away from the average or from the true range. If I increase the multiplier to 3, all it does, watch, it's going to bump it out. See, it makes it a little less aggressive, a little bit more conservative. So if I think I'm going to need to ride out a swing on a trade, I will try to keep my stop out of harm's way. So let's take a look at this example right here. If I were set at 2.618, oh, I still would have made it, but let's say I was set at 2.5. Oh, I probably would have gone stopped out on that little retracement. So it's just an easy way to adjust your stops. I don't like crowding my stops very much, so I'll go to 3. Sometimes if I think the market is very violent and needs a little more room, I'll go to 4. Remember, your stop is only a safety net. It's only there to protect your account if you're really wrong about what's going on. So try not to keep your stops so close that they get tagged. All the tools here are fully customizable, so you can make changes to all of them. Oh, you know what? Before we leave the ATR entirely, I've always changed the multiplier because that's given the most dramatic change to the trailing stop. Let's see what happens if we change the value here. Yeah, see, I went from 14 to 21. It did nothing. Yeah, even going back 100 periods does very little to change it. That's true on many of the tools. A close cousin to the ATR is the super trend. And you'll see an easy way to change your super trend to make it a little bit more liberal, give you a little bit more elbow room, is to just change the multiplier. Let's see what happens if we change the ATR period. It helps a little. Still not as fast. If you need to make a quick change the multiplier, click accept, and then you'll get something that's going to be either closer or further away. You can make it tighter as well, right? If you need your stop to be more aggressive, bring that multiplier down. Chandelier, also a derivative of the ATR, using different settings. The super trend uses a moving average to adjust the average true range. Chandelier, I forget what they use, but it's also a derivative of the ATR. And here too, you can make changes. You can make your chandelier more aggressive or less, whatever you would like. All right, the market, our signal has since voided, so we'll cancel that. You shouldn't be too hung up on finding the perfect settings or the perfect trailing stop. There is no such thing. What you want to do is you want to look out for, what seems to be following the market pretty well today. So if I took this buy signal down here, I always go back to a signal. If I took this buy signal, where would I have been stopped out? Right there. Okay, if you're satisfied with that, then go with the ATR at the default value. If you feel you left too much open, check parabolics. They're more aggressive. So if I entered here, I probably would have got stopped out there. If not there, here for sure. So the parabolics, probably not the system to use. What about the percentage? Well, that would have held me in, but I would have had more of a loss. So that's what you do, or that's what I do, is I just take a look at how is the market following. If I like the way it's following, then that will be my go-to stop, and of course I can always adjust it as the day or as the trade goes on. But that was a very good question. Getting a soft edge sell here on the Raptor. So we got the soft edge sell signal right here. You could just try to jump in. Stops need to go above the highs. Oh, that's not close enough or far enough. We'll get the stop in, and then we'll throw our stop in above the high. So the soft edge sell simply means that we've had a retest of the high, and we're looking for the market now to head lower, preferably at least to the hard edge, and sometimes it will go a little bit further than that as well. The hard edge seems like a realistic target. And I think our support and resistance lines had support around 44.45. Oh, sorry, my mistake. 44.49 quarter to be precise. After that, it's all the way down here to the median line. Well, that would be a rather significant move. I don't know if we're going to see quite that much out of them today, but we'll see. No signal on the hawk yet, although I suspect we might get a red bar buy signal that will fail. So if we get the red bar buy, we can actually set up to short it. Otherwise, we'd be on hold until we got a first micro-macro cross to the downside. Ooh, Jim says he'd be scalping from 44.58. That's the top end of this cloud here, I think. Our signal produced a little bit further away. Of course, you can always take it below the low as well, or here you can even get that second push entry that I was talking about. So the signal has engaged. We've seen the current limit of the sellers and the buyers, so you could enter to short right there. Essentially getting some renewed momentum. Yeah, good point, Jim. Jim says, you see the second candle here from the top? You see the width of them? There's a lot of selling going on here. The nice thing about the dynamic equivolume bars is that you can get a visual of the volume on each of the bars. And this is a system add-on. You can find out more about the dynamic equivolume bars at the Indicator Warehouse website. What makes the dynamic equivolume bars different from other equivolume charting is that it will work on any chart style, not just candlesticks. Oh yeah, no, definitely. Jim says a lot of buy stops above here. Yes, sir, you are correct about that. So what Jim is saying is that if people are selling here, where are their exit orders likely to be? Well, they're likely to be right there, just above the market. Oh, wrong thing. I thought maybe I could make those dots bigger. I guess not. Oh, not much going on. Gee, maybe the buyers won't be able to push the market down, and all we're going to get is the sideways range here. Getting the market drifting a little. possible first micro-macro cross. It's not a signal yet. Our macro line is still out of sync. But we did produce some warning dots. Oh yeah, right, Floyd. Floyd says oil and gas reports today. That's right, at the top of the hour. Natural gas coming out, I guess, in a couple minutes' time, and crude oil inventory at the top of the hour, 11 o'clock Eastern. Great question here from Andrew. Andrew asks, Eric, do you look at the ES to gauge where the NQ will go, as it does give clues? Or I think he's asking, does it give clues? You know, Andrew, funny thing is it's the other way around. The E-mini doesn't give clues as to where the NASDAQ will go. The NASDAQ tends to give clues where the E-mini will go. The late Marsh Jones actually had this is how he traded, is he would watch the NASDAQ and the mini Dow, or the big Dow, it doesn't matter. And if he saw a surge in buying on the NASDAQ and the Dow, he found that he had about 2 or 3 seconds to get an order in before the E-mini followed suit. The E-mini actually follows the NASDAQ and the YM. It does not lead. So if you want a little bit of a crystal ball, you can try that. What Marsh used to do is he would actually just watch the time and sales. He would watch the time and sales roll by, and if he saw a spike in the buying or the selling, but we'll say the buying, if he saw a spike in the buying on the NASDAQ and the Dow, the E-mini would follow suit. And he was never greedy on his trades. You know, if he could get $100 out of a move like that, or $200 would be huge, he would grab it. Jim watches a few different ones. He says, Jim says, I watch the DAX for the NASDAQ, the bank index for the YM, and the Russell for everything. There is a loose correlation, of course, between all the stock markets. All right, here come those buyers again. So let's see if we're in a trading range here, if the sellers are going to knock them down. We're getting all this sideways action, all these yellow bars, getting a possible green bar sell, which would be interesting. The market doesn't have much direction to it here at the moment. Is a retracement likely? Maybe. Oh, green bar sell just disappeared. The nice thing about the green bar sell signal, the reason I was entertaining it, is if we are in a trading range, the green bar sell would give us the opportunity to sell from near the top of the range. Which is what you want to do when the market's in a trading range. You want to sell from the top, you want to buy from the bottom. They're struggling here, though. They really are. They're kind of trading punches. And the longer we end up going sideways, the less influence this early rally will have on the market. We're coming out of scalp mode in about 20 minutes time. That'll be interesting to see whether the market does resume its original trend or tries to trend lower. or higher. Gold prices on the slide today. So gold opened way back here, 5:20 my time. Bit of a sideways mess, a couple green bar sell signals. Very, very difficult to take though, because look at how the band is. It's skewering the price activity. I suppose you could assume it's more of a downtrend than an uptrend, but really looking at it at this stage, it'd be very difficult to say. You did make a lower high. The lows are holding though. If you were to take it, it's kind of a guess, so you could try to take it there once the ATR line flipped over, cover above the highs. Once it did commit, however, had no trouble getting to your profit objective. And then it did it all over again. Nice little green bar sell. This one would have been easier to take. Followed by another green bar sell. So a very profitable day for short sellers in gold. Ryman says, I'm waiting for the trend. Not a bad idea. I almost think we're going to see the buyers recover the market here shortly. Of course, they need to get outside of this trading range. If you ever want to know how you trade a trading range, I will tell you. So it's pretty obvious we're range bound. What do you do? Well, the best course of action is to let the market break out, retest, which it will, and then look for your signal after that retest. Same thing to the downside. Let it break out, retest, and then wait for that signal to short. This retest sometimes will come quickly, and sometimes it may not come for an hour. So, you have to wait for it. The more aggressive traders will try to trade the breakout. However, sometimes the breakout will fail. Well, sometimes the breakout will fail. The majority of times a breakout will fail. I don't know if you've ever heard it said that 80% of breakouts fail. That's why we want to wait for that retest. In the meantime, we're just kind of on hold. Andrew says, you say it will, but the NQ can go ballistic. Yes, I know. Andrew's saying, you say the market will retest, but the NASDAQ can go nuts. Sure it can. So, same thing, sideways range, right? You're watching it, you're watching it, you're watching it. You're getting all these buy signals near the top end. And then you finally get a breakout. Now Andrew's saying you don't always get that retest. Well, here we got a real quick retest, but let's say we didn't. And the market goes higher without you, and you actually have to wait about 3 hours for the market to come back and give you a proper retest of that breakout. So you could be kicking yourself all through here saying, oh, why didn't I buy the breakout? And this is perhaps not the best example because sometimes the market can go much higher than this. But this is a good example in that, from the breakout, which occurred at approximately midnight my time till about 2:30 in the morning, is when you got the retest. So you'd be sitting on your hands, well, not sitting on your hands, but you'd be waiting for this retest for about 2 hours before it finally came. And in fact, it was a very deep retest. I would have avoided that retest when the market got that deep. I would have figured that it was getting into a new trading range. But I get your point, Andrew. However, I've always been of the opinion that I would rather, I put this on my nightly market update, I would rather be out of a market wishing I was in than in a market wishing I was out. We're always going to miss trades. But at the end of the day, it's your money, right? If you think the breakout is pending, then by all means, trade the breakout. And I'm not saying that to be facetious or anything like that, but you're responsible for your money. You earned it. You're trading it. It is your responsibility. You get to take all the credit or all the blame. Fun, isn't it? Well, that early momentum certainly seems to have dried up. That early bullish momentum that we saw. Let's go back here to our Raptor trade. So we had that big push higher. The sellers tried to knock the market down, and then a little push up and a little push down and a little push up. Yeah, Tony says, no, I always blame you for a bad trade. That's all right. I got big shoulders. But we're definitely stuck sideways. This is one of these 50-50 type trades where we've got an equal chance that it's going to work out as it's going to turn around and spank us. Come on. Come on a little lower. There we go. I'd love to see it get back to the hard edge here. I think that's a very reasonable target for the NASDAQ for our short. And if prices recommit to moving lower here, I will become a little bit more aggressive with my stop. The reason being, it will show the sellers have committed to short selling the market, and therefore, since I'm short, I need to get my stops in line. Well, Oh, brother. Jim says the DAX is starting to fall down, so maybe that will help pull the NQ a little bit lower here. We have seen the market, make several pushes higher. We got one push here, two pushes, three pushes, four pushes, without any follow through. So the buyers have got to be getting a little bit tired, but likewise the sellers. One, two, three. Here comes number four. All right, there we go. Okay, so the sellers starting to get a little bit more aggressive with their stops, or pardon me, a little bit more aggressive pushing through. Here we are back at this 44.50, 44.52 range that's been giving us all this trouble this morning. If we break down below there, then we've got a chance. Come on. Man. Okay. Well, what we're looking for here is we're looking for a breakdown below the 44, this low here, 44.49. 44.51 quarter, that's what we need to take out. And we're just hovering at 44.51 half. There we go. We got the half. Still on the half. Still on the half. Well, if they don't shake loose soon, I'm going to have to close up the room because I've got a meeting at the top of the hour that I should get ready for. I really thought we were going to see this break down a little bit more. Once it breaks this, if it breaks 44.51 quarter, 44.51, then I'm going to start to get my stops in nice and cozy. Well, cozy. I'll switch to the ATR. And maybe we'll leave it back just a little. Oh my. Well, the longer it goes sideways, as I mentioned earlier, the harder it is going to be for the buyers to try to recover this. Wow. All right. Well, they're digging in at 44.51 again. So we're just going to have to wait for them to get over that. I'm going to close up the room, folks. Like I said, I got to get ready for this meeting at the top of the hour. We'll be back again tomorrow morning, and hopefully things will shake up a little bit. If you are trading this afternoon, I don't know. I didn't think a move back here to the primary support, or pardon me, the median line was possible, but now I'm wondering whether or not it's inevitable. Then we're going to see the market dip here to the 44, 34, 35 area. We'll see. All right, catch you tomorrow. Bye for now.